to buy to buyers, potential buyers. The vast majority of people are going to pull their auction products away, aren't they? Because they could end up selling for bottom tick price. Why are they selling for bottom tick price? Because there isn't any demand. There isn't enough people to stimulate an auction. There's not enough people to stimulate demand. And for that reason, you pull your paintings out of that auction. You simply refuse to sell them because there is no volume. What happens in a retail space? I learned this in a very early age when I was talking to somebody about why McDonald's generally opens up beside a Burger King, who generally opens up beside a KFC, who generally opens up beside a Pizza Hut. Why do they have these food companies in one location? Because all the other companies drive business to all the other people, to all the other businesses. So you go down for a KFC, and then somebody else has a change of mind and they decide that they want a Burger King, and they go to a Burger King, they get their Burger King, so they stay in the one place at the same time. You'll see this in retail outlets when you move to a shopping centre that has many different companies involved, many different outlets. And one of the outlets closes next door to you, and the outlet next door to them closes. You're probably not far away from closing. Why? Because it drives footfall into that area. It drives what they call footfall into that area, maybe not into your shop, but at least your shop is getting exposure to those people in that area. They're getting to see what you're offering. You're getting to see how many people are coming in and not buying, so you can make adjustments to your offering to see how it starts happening. If people aren't there, it doesn't matter what you adjust. It doesn't matter how nice you make the shop window. It doesn't matter how nice your promotion is. If people aren't in the area, people not seeing your product, nobody buys. Nobody buys. And that's something that you've got to remember in the markets as well. I mean, the markets always find buyers and sellers willing to meet in the middle of some price action area, because neither of them technically are wrong, but just not very right either. And that's why at the extremes we see these volume drop-offs. That's the tapering we see in these profiles. We should very rarely ever see any volume at the edges. And the vast majority of edges, the only volume we should ever see is because people who'd bought previously get stopped out on a break lower, for example. Of course, that's not always true. Otherwise, the markets would just stay inside of a rotation their whole entire life. And we know that for a fact is not the case. It doesn't stay inside a rotation for their entire lives. They do move, and they do move value quite significantly at times. But that's because of an underlying fundamental driver that's dominating people's thoughts. So volume is really the key to all things. We were looking at the volume auction, for example, in the crack spread this morning. We had a little chat about it earlier. And we talked about the fact that the big volume surge that we saw on the crack spread gave us an incredible insight into a top edge. And we chatted about the crack spread again because we were still seeing a lack of anybody really talking about it. So we highlighted oil this morning, and we were talking about why the oil was so incredible. And I don't really want to spend too long on it at the moment because I'd like to cover it properly in a recorded classroom. But when you look at this chart here, you'll see exactly what I'm talking about. We were buyers of oil last night, this morning at 81.20s to $81. You'll see that from the tweet from 8 hours earlier. You'll also see that the crack spread had started to sell. Now, this is something that a lot of people haven't picked up on. When a crack spread has started to sell, this is usually because people are bullish oil, because if you think about what the formula for the crack spread is, it's RBOB minus oil. So if the crack spread is starting to sell, that tells us that people are starting to think that oil prices may be going higher. And that's something that we start seeing people actually physically doing. During that period, of course, we can see that whilst the crack spread is selling, the crack spread skew is dropping. Or sorry, the oil price is dropping, the crack spread skew is going higher. And that's another piece of incredible information. Inside this world of crack spread starting to drop off a little bit, the skew going higher, all I'm looking for now is for somebody to act on that information. Somebody acting on that information will show us a red, orange, or even a yellow volume candle. All the other low volume candles are colored blue in this example here, or gray, whatever color you see it. So we can see at this point here, we get a very, very big spike in the crack spread skew. The crack spread is declining. It's in a macro bull market, which is, we want to keep it in a macro bull market as much as possible, so it should only just be starting to turn. And then we start buying into these lower prints. If the crack spread has dropped too far, it could be really quite problematic for us. But the crack spread is starting to turn, still in a macro bull market. And obviously in line with that, I know that these lower prices will be buying opportunities for oil. And then when I see the buyer coming into oil, I don't just see the buyer coming into oil. I see volume coming in as well. I don't just see volume coming in, it's also in an area that we tweeted 8 hours in advance. It's into that area where we think the buyer will exist at 81.20s to 81 evens. We now have the perfect buy trade. And from that perfect buy trade, we now have a perfect projection based on the capper price and the breakdown price, and then the takeout to the top edge price. Into the top edge, you can see the crack spread is getting bought. That means people must be bearish oil. So it's the crack spread that's getting bought, which is bearish oil. And in that type of environment, I'm looking for yellow and orange candles, red candles, into higher prices. I get an orange candle here into a higher price, and I get an orange candle here into a higher price, and I get the sell trade. From that sell trade, we make an absolute fortune, and then we rinse and repeat when the price comes into this area here. We rinse and repeat. We do it all over again. We buy into the yellow, we buy into the yellow. We get a very reasonable upside pop on this. Unfortunately, we lose the VWAP and we come all the way back through the bottom edges again here, and we're obviously back waiting for the next opportunity. And that's what happens. And obviously since then, the oil price then did trade down. The VWAP, the crack spread started to selling off here. But obviously I want to try and make sure the crack spread is in a buy market, and it's difficult to give us a confidence that that's a buy market. It's in a buy market, but I'd like to see the crack spread making a little bit more of an upside play. Crack spread makes an upside play eventually here. The skew makes a higher high here. We get a red candle, and that gives us another buy opportunity right there. That turns out to be the bottom tick of the market right there. The bottom tick of the market. And obviously from that point onwards, we get this very nice lift to the upside. We can see that the overall shape of the crack spread is not retained its bullishness, which obviously we see the crack spread coming off here. That's expected to be higher prices a little bit, and that's exactly what we get. So what are we looking for just now on oil? What are we actually thinking? Crack spread's gone very bullish behind the oil price rising. That's okay. There's no trade for us, because if the crack spread is rising, I would need to see the purple line dropping down into the lows. At that stage, I would need to see that element happening on a macro scale basis, just like it did in here. And if that's happening, I could sell the market. Well, it's not happening, is it? It's not happening at all, so I can't sell the market. If I was going to sell the market, there was a short-term play that I could have taken. If I zoom in, you'll see exactly what I'm talking about. If I zoom in, there's literally one little candle in here that just has a tiny opportunity to go short, but I don't like it enough, not a chance. What about this candle? We're starting to see a little bit of selling on the crack spread. So we're starting to think, but it's not enough for me as far as I'm concerned, it's not enough. I'd like to see a wee bit more on that, and if there's selling coming in the crack spread, it's because there's buyers. I think the crack spread still looks bullish here, so in that case, I'm a little reluctant to buy it. If you bought it, you managed to get a nice 10, 15 ticks out of the trade and a scratch at break even, that's okay. But I don't think it was good enough personally for me to take the trade on at that stage. And I haven't really liked an awful lot else. You can see there's a little spike in volume on this candle here. That could have been a trade, but again, it's not, for me, it's not good enough. Maybe I've missed the move. It doesn't make any difference to me. I'll catch the next one and I'll make another $1,000. It doesn't make any difference. If we miss one, we can always catch the other. We talked about the fly trade being a buy trade earlier from the understanding of correlation coefficients. Here's the buy trade in here. So the fly trade was getting a buy opportunity here. So that was the sell on bonds. We started to talk about it here. We started to highlight this as a really good fly trade. We talked about the idea that that's what was going on. We covered this in classroom this morning, and that's obviously a long bond. That's obviously a long fly trade. So if it's a long fly trade, guess what's going to happen to bonds? Bonds were going to sell. Bonds sold off beautifully. Where did they get to? one tick away from the previous price that we bought from. It was that good. It really was that good a trade. A very, 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 very strong trade. We haven't seen any other curve divergency since that we can highlight. So if we see any of those today, we'll give you a shout about them this afternoon.